Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another YouTube video. This is going to be your daily cryptocurrency market update. And you may notice I am in an unfamiliar setting. I'm currently away. However, I really want to try and keep these daily cryptocurrency market updates going because it's just such a critical time for not just the cryptocurrency markets, but markets across the board, for economics. We're in this kind of post-lockdown world, and that really on its own stands out to me because I'm going to argue that a lot of what we've seen come previously and the models that are all showing imminent doom perhaps haven't factored in the sort of repercussions of global lockdowns and all this sort of stuff moving forward. So I think in the same way that we've had, the first time since 1981, or, it's never been this bad, or whatever it is, we're actually going to have some very unsurprising results to the sort of bull side of things. And we've given our sort of outlook on the cryptocurrency market. You guys will know, following a meeting that I had with my Patreons, we decided to put some money back in the markets for the first time in essentially a year. We mitigated a lot of damage as a group, myself, last year, through getting out the markets, admitting that we were wrong on how the bull market was going to end, humbly exiting the markets, writing it down, and then for the first time in a long time, we actually accumulated some crypto. I'm saying this for the new guys to the channel and just to sort of reconfirm it. Now, we're not all in crypto. I should change the name of the channel to somewhat in crypto. But we did take a position back in the markets following a conversation that I had with my Patreons on the 5th. And for anybody who's interested in joining my Patreon, it's well worth it for what you get for the subscription. You guys are going to learn as investors, as potential swing traders, as sort of people that are interested in finance, the sort of economic landscape, how it all works and the mechanics, and also interested in, altcoins and my own portfolio and what I'm buying. Well worth checking it out. There's a link to it in the description. Start of the month, great time to join. If you don't like it, you can always cancel your subscription. We want people that are there because they want to be there. But our outlook for Bitcoin has been as sort of optimistic as it's been for a while. And this was something that I was actually looking at in terms of, potentially how this bear trend ends. Do we form some sort of a head and shoulders? We've spoken about a number of reasons why we took a position. RSI divergence was one on the weekly. We spoke about you had your USDT dominance divergence. We've covered a multitude of things. And for anybody that's not familiar with that, you can go and watch any really of my daily cryptocurrency markets in January. But today is a big day, and we spoke on Monday about the week ahead, this week, and what it was going to mean. And there's been a lot of data that's came out. On Monday we had the Japanese unemployment rate, not too significant, but we did see a bit of a move with the JPY and the dollar. The dollar, remember, is a colossal part of the story because this is a dollar index and the S&P. They're in sync, and it makes a lot of sense because you're looking at the S&P against the dollar or Bitcoin against the dollar. But we have done really deep analysis on that. So yesterday, we had the German GDP, we had the Eurozone GDP, we had the German CPI, the Chicago PMI, and the US Consumer Confidence. So I'll be covering all this with my Patrons later. And of course, we're really going to be we're hopefully going to have a meeting today, even though I'm away, looking at the fact that we've got the FOMC rate decision. This is at 7 p.m. UK time, by the way, and they're expected to raise by 25 basis points. Now, this is going to be interesting. We also have the Eurozone CPI, which has shown inflation continue to dip. However, tomorrow, we've also got a very important day with, I think, the Bank of England and the ECB rate decision. They're looking at around about a 2.5 again. The Bank of England looking for about a 50% or 50 bips. So we are still under, and other than the US, and the US is still continuing to bring in harsher monetary policy, and we've spoken about what happens with monetary policy and what it does and why it sort of takes liquidity out of markets, and markets have to readjust for it. We've pulled up charts, so we've looked at your assets in comparison with interest rates and also derivatives of interest rates and where they're going. But the real question for me is, are markets underpricing and being overly optimistic at this point. And we've seen a real easing in monetary conditions. And we're going to talk about that with a number of tweets. We're going to look at this thread from Jim Bernanke. I really like Jim Bernanke. I think he's I really, really enjoy listening to critical thinkers around the market, not just regurgitators, which a lot of financial sort of accounts are. This was a tweet from Michael Brown, essentially looking at US financial conditions. They're easiest since last summer, despite 200 or 2% in terms of rates. Remarkable discount between Fed guidance, comments, and market reaction. Expected tough, higher for longer talk from Jay Powell again later, but will probably fall on deaf ears. So our market's just completely ignoring the sort of financial conditions that we're in and underpricing it. And actually, when we're talking about the interest rate hike that's coming later on, everyone's very much set on it's a 25 basis point. I can't help but feel like maybe the Fed might want to bolster their dollar a bit. I don't think 50 bips is out of the question. If we got a 50 bips, markets would definitely have to reprice and rethink. And then, of course, we've got the CPI coming out next week. So it's just crazy amount of market data, which is why we're really trying to do all this. And you know, if we look at this, for example, this is from Alicio. Hedge funds have the biggest net short position on US Treasuries ahead of the Fed meeting. They bet yields will bounce, which means that essentially, for me, it means that the dollar will catch a bid on this. And there's a lot going on. But I wanted to show this. This was a tweet from Michael Bully. It says, Burry, he says, sell. Probably based on the fact that he thinks markets are underestimating rate hikes. And then we have good old Jim Cramer. So it says, just in. Jim Cramer says we're in a bull market and buy the dip. Now, how the hell he can determine, I don't know what his reference for me, a bull and a bear market is a macro term. I'm not one of these people that is asked in looking at we're having a week and that's a bull market, and then the next market's a bear. It's a bear. No, we're still in a bear market, by the way, ladies and gentlemen, until we start taking out some of these lower lows and lower highs. You know, Dow theory, trends, get familiar with it as a trader, as an investor. It's going to help you out greatly. This is a bear market. We entered this bear market back here when we started to make a concession of lower lows and lower highs. You can look at EMAs or whatever it is to sort of look at this, and vice versa with bear markets. This is a bear market and this was a bull market. So his who knows what this guy's smoking, but his reference of a bull and a bear market are just out of sync. Doesn't matter. But the second part of his statement is buy the dip. Now, that's something that I'll be doing. So, you know, I had to look at myself in the mirror after reading this and say, am I really agreeing with part of what Jim Cramer's saying? However, a broken clock is right twice a day. I'm going against Michael Burry, who we're very much on the side of, and we're on the side of last year. But really what happens today is going to be extremely significant. And I want to just read this tweet this thread from Jim Bernanke, talking about the Fed. So the Fed says the inflation fight is not over. We are expecting the markets to ignore it as they believe a recession is coming down and will cause it to pivot. Pivots, by the way, are bearish for markets. Every pivot we've had has been on the back end of something crap happening. Maybe it's what the yield curve is future forecasting. And markets typically sell off in that. So this pivot bullish narrative, ignore, and if what I say doesn't match up, by the way, guys, you should ignore me too. Ignore your FinTwit and your crypto YouTube, just content creators. Do not be arched and go to the brickmaker to go and get your jewels from the Phoenicians that you hope to then sell. Go to the jewel maker and ask him in regards to some advice on or some knowledge on jewels. Don't go to content creators. Doesn't pay me to say this, by the way, because I am technically a content creator. I'm an investor. I'm a blockchain enthusiast, lover, and of course a trader. You know, it's part of my makeup. But I enjoy what I do. I love making videos for you guys, and it's something interesting. But just be careful who you listen to there. So the Fed will respond by saying the data, especially labour data, is not showing a recession. The markets answer just wait. So Bloomberg has updated the latest economic forecast for January. This group not only expects Q4 GDP to revise lower, but they expect nearly zero GDP growth in Q1 2023, a negative GDP growth in Q2 2023, and Q3 before the economy rebounds later this year. So maybe, but we've actually seen some decent GDP stats coming out. The same group of economists also expect a big rise in unemployment. We've done a case study on unemployment and markets. Historically, the consensus has been wrong. Recall, something was a temporary disruption in 20. So these guys have got things wrong all the time, and I think they're going to get things wrong again. Also, what people are also not factoring in is China. They've just reopened for the first time in 100 and something days. Discuss this with my Patreons on Tuesday, guys. If you can afford it and it's something that you want to do, look into it because it's going to help you out massively. I'm currently away, but when we get back, the game is over, guys, for these other groups. So will the consensus finally be correct this year, or will it be early, even at late 2023? Early 2024 slowdown means months of higher for longer before pivot. This alone will disappoint. Are we willing to be with the consensus, or should we take better odds? So this is the main thing for us: is our markets underpricing what the Fed are doing? I think they've, in many ways, if you look at market crashes happen because something breaks. Markets go down because interest rates go up. Usually something breaks because interest rates goes up. But what happens if that's an avoidable situation? We've got tight monetary policy. We've also got them talking about upping the debt ceiling. What does that do for liquidity? This is not a simple game. And when you're looking at historical data, it's a good benchmark to use. But when was the last time we had global lockdowns for nearly 2 years? And what does an economy look like? We can go back to the Black Plague maybe and look at what the economy was like there. But there's not much data on it. Black Plague and what we've just gone through are nowhere near comparable, by the way, guys. In the slightest in terms of severity. Just to sort of put that point out there. But are markets underpricing things? This was from Michael Brown, US financial conditions at their easiest since last summer, despite going up 2% in rate hikes. Talking about a disconnect and markets, shrugging this off. This is risk premium, worth nothing, the worst implied risk compensation in equities since 2017, or 2007, sorry. So this is the risk premium. It's at a decade low, so people are putting high sort of emphasis on risk not being wanting to touch. It's dangerous to touch risk. That's not often, when you're at a low point, just like the yield curve, at its lowest point, actually is not, and historically hasn't been a bad time to buy because it usually doesn't, we don't have a crash until it's uninverted and the market typically runs from there. That's something that we did another study on. And this was interesting. I just found this for a little bit of interesting things before I love and leave you. A guy paid $1.7 million for a 2-night stay at the Higher for Longer Island today. He made a bet in February for the forward futures for a 50 basis points instead of a 25 on Wednesday from the Fed. I don't think it's likely, but he'll get 35 million if he's correct. And you have a lot of hedge funds that are actually probably betting on higher rates. Okay, and this is certainly something that I'm very interested in. So on that note, guys, I'm going to love and leave you. We have a relatively optimistic. I hate to say that I agree with Jim Cramer's second half of the statement. Buy the dip. We've been a buy the dip. You're an idiot for. That's been our sort of what we've been saying for the past year. Now we're saying, I'll be personally potentially buying the dip. And again, if you want to find out more about that, welcome to join my Patreon and what it is we're buying. So we'll see what happens with the data. It's going to be a big day today. Thursday's going to be interesting, and actually Friday's going to be significant with the US non-farm payroll. Again, all metrics to weigh up the economy. We will see Michael Burry against Jim Cramer. The winner, you decide. No, I don't know. We'll see what happens, guys. But on that note, I'm going to love and leave you. A big question for me is, are markets underpricing everything? Maybe. I happen to genuinely think that, I'm very happy and comfortable with buying crypto at the start of the year, having been out of the market for a year. And again, we didn't put everything that we took out back in, but we allocated. All I've got for you in this video, guys. You enjoy the content, like as always, appreciate it. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Wednesday.